Hello everyone, this is Valdestot here, and on today's video we're going to talk about what being a true independent contractor really means, because a lot of people, a lot of drivers, a lot of customers don't understand the difference of being an employee versus being a true independent contractor. So the title of this video is Tired of Doordash treating you like an employee instead of a true independent contractor? Then take the initiative instead of doing nothing about it and actually become one. Be your own boss. There are two types of drivers in this gig world. One that has an employee mindset, and two, a business person's mindset. The differences are, an employee mindset will literally do whatever the app sends their way. They don't care about the pay, mileage, or anything negative regarding the company. Two, a business person's mindset will question everything about the app. Is the pay worth taking the offer? Is the mileage worth the pay? Are the app's rules infringing on your rights as an independent contractor? Is the app showing important information such as pay transparency or hiding other vital information needed to make informed business decisions? Then there are these people, the drivers that think just by cherry picking offers and have the ability to work when they want, then they are independent contractors. They think that by doing so, they are not employees. As long as they make their money, nothing else matters. Sorry to break it to you all, but you are not independent contractors. In fact, none of these categories are based on the true independent contractor definition. Straight from the IRS website at irs.gov/businesses/small businesses self-employed independent contractor defined. The general rule is that an individual is an independent contractor if the payer has the right to control or direct only the result of the work and not what will be done and how it will be done. The earnings of a person who is working as an independent contractor are subject to self-employment tax, aka small business owner. If you are an independent contractor, you are self-employed, aka small business owner. To find out what your tax obligations are, visit the Self-Employed Tax Center. You are not an independent contractor if you perform services that can be controlled by an employer, like what will be done and how it will be done. Yeah, sounds like something Doordash, Grubhub, Uber Eats, or any of these gig apps are pretty much doing. This applies even if you are given freedom of action. What matters is that the employer has the legal right to control the details of how the services are performed. In this sense, gig apps like Grubhub, Uber Eats, and especially Doordash treat drivers more like employees than as independent contractors. Want to know the only way to break this gray area employee contractor fiasco? Here is how to get rid of the low pay, high mileage offers with no penalties for rejecting too many orders without worrying about being top dasher, premier driver, diamond status, or any other way of making a driver have to worry about acceptance rates to get more orders delivered. No more fear of deactivations or worrying about ratings in general. This is how. By becoming a business owner. You got it. That is the only way out of this mess we call the gig world. Step 1. Easy. Just do some research in your markets. Market research will tell you if there's an opportunity to turn your idea into a successful business. In our cases, courier businesses. It's a way to get and gather information about potential customers and businesses already operating in your area, like Uber Eats, Grubhub, Doordash. Use that information to find a competitive advantage for your business, kind of like being reliable and doing your delivery job and undercutting them by not paying them, or charging them, I should say, charging restaurants 40%, 30%, 25% fees, in addition to making them force price increases on their menu just to make ends meet. I can almost guarantee you, if you simply say at least $1.50 a mile plus a base pay, you'll have plenty of restaurants on your side, as long as the base pay is okay. And if you can keep your cost to the restaurant to anywhere from $6 to $8 per delivery, I think it's safe to say they'll do it, because realistically, they have to pay minimum wage if they have their own staff of drivers anyway as employees. So minimum wage is $7.25, right? Plus they have a service delivery fee that even pizza restaurants have. So if you can get a delivery in about the $6 to $7, maybe $6 to $8 range, or depending on where you are in your market, if you're in a higher cost of living market, it can be more. You have to do your research and talk to the different restaurants and finding out if they are interested in hiring a independent contractor driver to work with them to deliver their food. Step 2, write your business plan. Your business plan is the foundation of your business. It's a roadmap for how to structure, run, and grow your new business. You'll use it to convince people that working with you or investing in your company is a smart choice. Okay? Now, anyone can write down delivery person. That's the easy part. Your business plan has to entice clients of why they should invest in your company and trust you to deliver their orders. Write something down that will razzle-dazzle them, wow them into taking you on as a client. Step 3, fund your business. Your business plan will help you figure out how much money you'll need to start your business. If you don't have that amount on hand, you'll need to either raise or borrow the capital. Fortunately, there are more ways than ever to find the capital you need. Now, this is kind of not as important for delivery drivers, because as a delivery driver, you all have a house, so you don't need to go, or an apartment or someplace to live, right? So you don't need to rent an office space, which requires money, right? 2, you already have your own vehicle. So, I mean, if it's owned outright, even better. But if you're making monthly payments on it, okay. But you still have the vehicle in your possession. Those are the top 2 expenses. Rent/mortgage for a location and a vehicle expense. Obviously, you're going to have better insurance because you need to protect your assets. Step 4, pick your business location. Okay, we just discussed this earlier. Most of us will just use the house, apartment, or any place you're at as your business location. You don't need to pay extra for it. But if you are setting up a brick and mortar business or launching an online store, the choices you make could affect your taxes, legal requirements, and revenue. Step 5, choose a business structure. Now, this is kind of important. The legal structure you choose for your business will impact your business registration requirements, how much you pay in taxes, and your personal liability. Okay? There's 3. A sole proprietorship, a partnership, and a limited liability company, an LLC. A sole proprietorship is easy to form and gives you complete control of your business. You're automatically considered to be a sole proprietorship if you do business activities but don't register as any other kind of business, like a partnership or an LLC. Sole proprietorships do not produce a separate business entity. This means your business assets and liabilities are not separate from your personal assets. That's a risk though, okay? But to continue, and liabilities. You can be held personally liable for the debts and obligations of your business. Sole proprietors are still able to get a trade name. It can also be hard to raise money because you can't sell stock, and banks are hesitant to lend to sole proprietorships. Sole proprietorships can be a good choice for low-risk businesses and owners who want to test their business idea before forming a more formal business. A partnership is stuff that really doesn't get used a whole lot unless you have another person wanting to go into business with you. You can read that on your own, but it's kind of in the mid-ground, okay? A limited liability company, however, would be a good option, but there are costs involved with doing so. But an LLC lets you take advantage of the benefits of both the corporation and partnership business structures. LLCs protect you from personal liability in most instances, your personal assets, like your vehicle, house, and savings accounts. They won't be at risk in case your LLC faces bankruptcy or lawsuits. That's the big advantage. But again, there's an additional cost to form one. Step 6. Choose your business name. It's not easy to pick the perfect name. You'll want one that reflects your brand and captures your spirit. You'll also want to make sure your business name isn't already being used by someone else. Now, every state has their different rules, and they have their own name for the department that helps you choose your business name. State business name searches. Every U.S. state has an official business name availability search tool that is readily available to the public. This digital tool is always run by the state agency responsible for business filings. Most commonly, your go-to agency will be your Secretary of State or Department of State, though sometimes it's run by an alternate department like the Department of Commerce or Department of Revenue or Department of Licensing or Division of Corporations, etc. As long as you know the right agency for your state, you should be able to find a free search tool on their website to help you figure out if your business name is taken. As examples of what search tools to look for, here are a few links to a few official state search tools in the U.S. Arizona Corporation Commission, California Secretary of State, Illinois Secretary of State, New York Department of State, Pennsylvania Department of State, Virginia Corporation Commission. Those are just some examples. In some states, the search tool is part of the business registration process, but it'll usually be at the very beginning. That means you won't have to worry about having to change your proposed name halfway through the process or after paying a filing fee. To use your state's search tool, you usually only need to provide your business entity type and your desired name, then cross-check with current records. Step 7. Register your business. Once you've picked the perfect business name, it's time to make it legal and protect your brand. If you're doing business under a name different than your own, you'll need to register with the federal government and maybe your state government too. Step 8. Get federal and state tax IDs. You'll use your employer identification number, short for EIN, for important steps to start and grow your business, like opening a bank account and paying taxes. It's like a social security number for your business. Some, but not all, states require you to get a tax ID as well. So to get a federal tax ID number, your employer identification number, EIN, is your federal tax ID. I had one when I had my businesses. Okay, it's not hard to get. You need it to pay federal taxes, hire employees, open a business bank account, and apply for business licenses and permits. This is the very first thing you need before you get your local and state business licenses or state tax IDs. It's free to apply for an EIN. and you should do it right after you register your business. Your business needs a federal tax ID number if it does any of the following: pays employees, operates as a corporation of partnership, files tax returns for employment, excise or alcohol, tobacco, and firearms, withholds taxes on income other than wages paid to a non-resident alien, uses a KEOG plan, a tax-deferred pension plan, works with certain types of organizations. Apply for an EIN with the IRS Assistance Tool. It will guide you through questions and ask for your name, social security number, address, and your DBA, doing business as, name. Your 9-digit federal tax ID becomes available immediately upon verification. Step 9. Apply for licenses and permits. Remember I said get the EIN first? This is why. Keep your business running smoothly by staying legally compliant. The licenses and permits you need for your business will vary by industry, state, location, and other factors. So to get permits and licenses, check with your local, state, and federal small business agencies to make sure you have all of the permits and licenses required for a food delivery service in your community. Get food delivery business insurance. Find small business insurance coverage to protect yourself from liability risks and unexpected out-of-pocket expenses. Step 10. Open a business bank account. A small business checking account can help you handle legal, tax, and day-to-day issues. The good news is it's easy to set up one, and if you have the right registrations and paperwork ready. Now, once you start having everything completed, you are now officially your own business owner. As a business owner, you will have expenses. 1. Location expense such as your house, apartment, or office location. 2. Vehicle expense. 3. Vehicle insurance expense. 4. Utilities expense. 5. Initial and ongoing license and permits expenses. 6. Operating budget such as fuel costs / maintenance and employees, if any, and the owner is an expense as you also have to be paid. 7. Monthly, quarterly, and yearly tax payments. To get started, you will need an income revenue stream, which means that you will need clients. Hey, every business needs a client because how else are you going to get paid? As a food delivery courier company, you will need to partner up with local restaurants and discuss terms and fees for your services. If you want to partner your company with only one restaurant or multiple restaurants, it will all depend on how much income you want to make and how often your availability will be for your clients. You could have employees too, but I'm not sure if you're ready for that yet. That'll be a topic for a later date. Remember, you all want to make lots of money for yourselves, right? Multi-apping different platforms and constantly go, 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 on the go, right? This way, no one will tell you what to do and when to do it. No worrying about some app's rules, customer complaints, what to accept, decline, or being in fear of deactivation. You are in charge. This is what being an independent contractor is about. You set the rates. You set the mileage. You work the times you want to work with no one telling you what to do. You're your own business owner. The only one that tells you what to do is technically your clients, the restaurants. That's it. Do you see the difference now between how Doordash treats drivers versus what an actual independent contractor really is? And the sad thing about this is that some people still won't care. They'll just be rah, Doordash, Grubhub, Uber Eats, gig drivers. They're going to think this was a waste of time. It's too hard. I don't want to do this. I just want to flip the app on and just get orders the old-fashioned way and not have to worry about all this. This is the problem with you people. You want to have your cake, eat it too, or just don't care about how bad a company is declining as long as you get paid. You know, but hey, to each your own, right? So, are you all ready to leave the Doordash, Grubhub, and Uber Eats nest? Setting up a business is really not that difficult. The hard part is getting clients and partnerships set up for the actual delivery work and following through with running your own business, such as accounting, paperwork, and staying on top of your bills and expenses. That's really the hard part. The initial setup costs are usually under a few $100s, which normally goes for the licensing costs to the governmental agencies at the local and state levels. If you want a website, then there will be costs for the name domain, hosting, and security. Hopefully, this will open your eyes into how to truly be independent contractors. Wean yourselves off the Doordash gig app teat. If you think you are really independent contractors after hearing all this, you are all fooling yourselves big time. Thanks for listening, and if you found this video helpful, give this a like and a subscribe.